Hello, everyone, and welcome back to another amazing YouTube episode where we're going to be talking about good psychologist practices to help you control emotional trading. So, in today's video, we're going to be talking about trading psychology because it is the real secret weapon for anyone who wants to be consistently profitable, and you're going to learn how to handle your psychology when you are trading. So, if you've ever felt the rush or fear of entering a trade, or when a trade is going against you, or you've had that overwhelming greed to chase profit, then you know what I mean. Right? Your ability to manage your mind is what truly separates successful traders from everyone else. So, without further ado, let us dive into how you can master your emotions. Now, the entire psychology game in trading usually boils down to managing two primary factors, which are fear and greed. Now, what is fear? Fear is actually what makes you hesitate on a valid entry, or worst, it makes you panic and sell a position because you cannot stand the temporary drawdown on that trade. Now, fear would usually lead to underperformance, while on the other hand, greed is actually the urge for more, the urge for wanting more. It actually pushes you to take over leverage position, risking too much because you are chasing more profit, or it encourages you to hold on to a winning trade until that winning trade actually turns around and becomes a loser because you are waiting for the absolute peak to take your profit. Now, the amazing thing is that you can eliminate these emotions, but you absolutely must recognize them and stop them from controlling your decision making whenever you are trading. So the goal right here is to be a logical robot and not an emotional trader. And before we dive into the solutions that would help you manage your emotions, I would like to give you guys a quick heads up. So, if you're serious about taking your trading from emotional guesswork to disciplined execution, you need a very strong foundation. And at Coinlinity, our comprehensive trading course is designed to give you that exact foundation you need. So, we are going to be offering a huge 50% discount offers for the viewers of this video. And to get that discount, all you need to do is check the link in the description and make sure you get your 50% discount while it is still on. Now, with that said, let us dive back into how we can fix our psychology when trading. So, the number one defense against emotional trading is a very strong predefined trading plan. And this plan must be written down and followed like a constitution. Now, what does this trading plan do for you? It actually removes the need to make impulsive choices when your money is on the line or when you are trading the forex market. Now, a solid plan will answer two key issues when you are entering a trade. One, it will define your entry criteria. It will define your risk management or your stop loss, how much capital you are willing to lose on that particular trade. So you must actually set your stop loss before you enter a trade, or know the stop loss you're going to be using whenever you enter a trade. And the third one is your profit target, all right, your take profit level. You must know where you want to exit from, where you want to take partial from, and where you need to move your stop loss to break even, because this prevents you from getting greedy and from making irrational decisions and overstaying yourself in a trade. And it actually helps you lock in profit before the trade starts going around and either going to your stop loss or hitting your break even. Now, if a potential trade does not meet every single item that is on this criteria or on your trading plan, then you do not have to take it. It is as simple as that. The second method that will help you handle your psychology when trading is accepting the reality of losses. All right, because in the financial market, losses are inevitable. So if you're trading and you're feeling like you do not want to take a loss, well, I'm here to break it to you that losses are inevitable. All right, every profitable trader understands that losses are part of the game and they are guaranteed. Once in a while, you are going to take losses here and there. Right, losses are just the cost of doing business when it comes to the financial market. So the key here is making sure that those losses do not wreck your account or your mind. That is all about the risk. All right, risk management. That is why you need to have a proper risk management after your trading plan. So you must use the percentage rule, which is popular in the market. Do not risk more than 3% of your capital or your equity. All right, it can be 3%, it can be 2%, it can be 1%, but the general rule is that you should not risk more than 3% of your capital. The next one is avoiding revenge trading. So revenge trading is when you immediately jump into another trade after you have taken a loss. You are trying to get your money back instantly. All right, this is pure emotional trading, and it is the fastest way to actually wreck your account. So whenever you take a trade, a loss in the financial market, what you can do is actually step away after you take a loss, review your trade calmly, and then you come back when you have cooled off. The third thing here is to focus on your process. All right, your only job is to execute your plan perfectly. That is what you are supposed to do as a trader. Execute your plan perfectly. If you follow your trading plan, it doesn't matter if it is a winner or it is a loser. As long as you followed what is in your trading plan, then you're on your way to become a professional trader, because that is what you should be focusing on executing your winning strategy or your trading plan over and over again. And in time, you are going to notice that you are profitable over the long run. Now, speaking of executing your winning strategy or your trading plan over and over again, if you're a newbie or you're just getting started with the foreign exchange market and you are struggling with consistency, then we are holding a 5-day free forex training program at CoinLinity. Now, this training program is all about getting the basics right, improving your analysis, building that mental discipline that you actually need when it comes to trading. This is what we are talking about in this 5-day free forex training program, and it costs you nothing but your time. So all you simply need to do is actually use the link in the description below. Make sure you sign up, save your spot, because the space is limited. So sign up right away using the link in the description below, and you'll be able to learn all of these amazing things with us at CoinLinity. Now, the third way we can actually handle our trading psychology or emotions when trading is by having practical mental tools. Now, what are these practical mental tools? There are one, your journal. All right, very, very important. Your journal is a very important tool you need to have when trading. All right, so what is your journal? Your journal is your trading record, all right, the record of your history, a journal that actually describes or has your feelings written down. Whenever you're taking a trade, you're going to jot down how you are feeling, your entry, your exit, your P&L, and especially how you are feeling when you are on that trade. So this would actually help you understand how things are going over time, and then you learn to adapt to those feelings and avoid making the mistakes you are making when those emotions come around, especially when you are on a trade. So your trading journal is very important. It's an important tool for you to have when trading. Second one is to always trade small. So when you're getting started in the foreign exchange market, you want to start small. All right, start from small lot sizes, start from small position sizes. Give yourself time to practice the strategy until you master it, and then you can increase your lot sizes so that you do not get greedy and you do not get overconfident and start stacking up big lot sizes and then wrecking your account in the process. And the third one here is to always take breaks. All right, so if you feel like you're stressed out or you feel Europhia creeping up, you can actually walk away from the chat, take a time out with friends, with family, step away and catch some breeze or catch some air, and walk around for like 15 to 20 minutes. A calm mind will actually help you, because when you are calm, you are not going to do any irrational thing in the market or take any irrational trade without actually following your trading plan. And so guys, these are the way you can actually handle your emotions when trading. Remember, trading is mostly a psychological business. All right, you need to master your fear and your greed by strictly following your trading plan and actually managing risk properly. All right, you have to be patient, you have to be disciplined, and you have to treat this like it is a serious business. Now, if you find this video helpful, make sure to hit the like button, subscribe for more trading insights, and let us know in the comments what your biggest struggle with trading psychology is. And also, you can follow us on other social media platforms, on Facebook, on Instagram, and also on TikTok. And you can reach us on the contact displaying on your screen. Thanks for watching, and I'll see you next time.